Unpack those beach bags. No early 4th of July celebration here on pre-market prep. We got bank news. We got healthcare news. We got Apple on the move. We got Frank Holmes at 8:35, ADP at 8:15. Let's go on this synthetic Thursday afternoon. Pre-market prep starts right.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We were really in the green, and now we're in the red by a couple handles at 62.4675. Let's see if we can hold just above the pre-market low. The buck is up 13 cents, 96.60, new low of the move yesterday. TLT taking a haircut here, down 78 cents, 87.37. USO in the red by 25 cents, 73.68. GLD, big day yesterday in the red, today down $1.05 at 306.50. SLV flat 32.76. Bitcoin, it's up a couple grand, hanging at the 108,000 K level. Let's bring in the star of CNBC, India.
Yes, they all give me heat. So I wore a collared shirt today because they like, you wear a suit when you go on CNBC India and you don't wear a suit for us over here. So I wore a collared shirt. Yeah, nice. I'll wear a suit for you guys one day. I'll surprise you guys. We'll do that. Joel would like if I wore a suit every day.
No. All right. So, wow. Let's just get the macro news out of the way. Japan, no deal with Japan. Honor. Who cares? Didn't affect Japan. Whatever. That the street immune to the tariff story. What else is there to say? Surely didn't hurt that ETF, right? All time backed off a little bit, down a little bit today. So tariffs, I think we can just sweep that under the table for now.
Yeah, one thing though, and what we need to really talk about is that was some of the most vicious rotation we've had all year. And I don't think it's a coincidence that it was the first day of the second half. We talked about window dressing at the end of the quarter. We definitely saw that where a lot of those tech names closed up near their highs on the end of the month, which I'm losing track of days, but which would have been Monday. And then, you come in the next day and they come with their selling shoes on and knock them right back down. So S&P's flat yesterday, which just a quiet day, nothing going on, la, 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 la. No, not that at all. Not quiet, not a nothing day, a wicked rotation day from leaders to laggards. The first half leaders were all your laggards. The first half laggards were all your leaders. Meta's probably one of the best examples, losing 20 points yesterday. Netflix as well, having one of its worst days of the year.
Really?
Was down as much as 60 points at one point in time. You can just go through stocks like Palantir, the nuclear trade with Oklo and CEG and all those other ones. CCJ was another one too. You had a lot of the other leaders from tech all trading significantly lower. And then you had a wicked rally in the value names. The drug stocks having a fantastic day yesterday. Also, the consumer staples had a pretty good day. The banks were strong. They're strong again, which we'll get to that news in a second. The home builders, which were a huge laggard in the first half, had a huge day yesterday. Lennar up significantly, Toll, KB Homes, DHI. So oil was doing good. So that's what we've just laid out here, Joel, is the theme changed yesterday. Is it more than a one-day thing? Well, I can tell you the earning thing as well, because we were seeing weakness in those same names this morning and seeing strength in those same names. Retail had a day, man. Maybe we should start there. Retail stocks ripping higher yesterday, following through today. Look at Kohl's. Look at Macy's. Look at Target. Target had a break.
Target rally. Holy man.
Long Target in the day trading account. We'll probably sell that at near the open. But man, there was moves.
Rotation, right? That's the lifeblood of this market. And you could go with Pfizer. I think that's one of the best days that's had. And Man, I guess since April, you had a nice tight consolidation period too. We looked at that one in the morning, or like, hey, they take out the 24.50 seller. Now, but now the question is, was it a 1 day wonder?
Yeah.
Are they coming back for more? Is this the sign of things to come? And right now, I mean, you got Pfizer trading up, 17 cents. You got Target following through. I mean, we could just go through these BMY. I mean, consolidate all these things. All these charts are looking the same. If we want to paint it with a broad stroke, XLV or XLP is what I wanted to bring up. Everybody drinking Pepsi. I mean, have you ever seen a move that's
Oh,
one big
stocks
move?
will
Pepsi
have
up
one
71 cents.
ripped yesterday. Yeah. I mean, that stock's been straight down for the last 6, 7 months and ripped higher too. So, I mean, across the board, strength in the laggards. The question again is, does it last more than a day? I think it lasts more than a day. I don't know if I'd chase, but if you get a little pullback, maybe start looking at these names. I mean, some of these value names, and we've been talking about this, relentlessly for a while. Some are getting just too cheap. I mean, you can just go through and yeah, the drug stocks got an uphill battle and it's going to be bad headlines still coming. And yes, Trump wants to bring down drug pricing, which is an issue. But I mean, Merck is probably trading with the lowest PE maybe it's ever had. It's trading 9 times earnings right now, even after yesterday's big move higher. Pfizer, one of the lowest PEs it's ever had, 8 times earnings on a forward basis. 8 times it's trading. You
Get a
had
little
Pfizer
dividend.
in the tech
Yep.
bubble back in the year 2000 was trading 40 times earnings. Now the stock is still down 20 points. So in the last, and you do get a dividend. So it's not, you've been getting a nice dividend, 6.8%. But I mean, these stocks have just gone nowhere for a long time. They've been dividend plays. But if rates actually do indeed start going lower in the second half, it's probably not your tech stocks that benefit the most. They work no matter what, maybe. But those beaten down value names like your home builders, your drug stocks want lower rates too. Not only the small biotech, the large cap drug pharmaceutical companies want lower rates too. Why? Because their dividend yields become much more attractive. If you can get 5% risk free, why am I paying up for Pfizer for a 6% dividend? But if rates are down to 3 or 4, you're like, holy crap, that 6% dividend all of a sudden looks really good. So Bristol Myers, 5.19%. I mean, these stocks, if interest rates do go down, are dirt cheap.
Kind of a broad question here. Like, do all the fund managers do they are they running the same algorithms? Is it just you had the end of the quarter, the rotation, asset allocation? Is it the herd mentality? Is it the one thing that you got to pick up on too is that once these moves start, then the technical people kick in, the algos pick in, like I don't want to say a momentum trader in Pfizer, but there's a stock where you could trade a lot of volume. So yeah, the funds get it started, the large institutions and stuff, but it starts to, show up on scanners, starts to show up on, your Momo. I don't
Oh,
know if
yeah.
it made it to Reddit or anything like that. They're not the super sexy stocks, but it just has a snowball effect.
Well, that's it. If the value stocks start becoming momentum trades, then all of a sudden the CFs of the world get more interested. And we know Christian, one of the best momentum traders, on Twitter, is trading the Momo stuff because that's where he always puts his money. What is hot? So if that stuff could ever really get more than a 1 day rally going, it starts to interest all those Momo traders too. And then you get a Momo value rally. That would be something to behold because these value stocks are really weak. I mean, at its core, I've always been a value investor. I've always taken the Warren Buffett approach, and I look at my portfolio, I don't have any drug stocks in there because they just have that uphill battle with the current administration. They've been so beaten up, they've been an awful place to be. I've got Pfizer, which has just been awful. I want to have Bristol Myers. I want to have Merck in there. I want to re-get my Amgen in there. I want to re-get these stocks in there. It's just this administration scares the hell out of me. And you don't know what they're going to say next. So I think there's going to be a time and place to buy, a lot of these beaten down names. And I think if you've got a 10-year time horizon, you can probably start doing it on pullbacks now. But if you got a 10-day time horizon, who the hell knows? Maybe the story remains the same. AI is still coming. Tech stocks are still hot. They got beat up yesterday. So as much as we can say, oh yeah, the value names may be buys, I mean, a lot of people are probably looking at the tech stock dips here and saying, here's the dip I needed. I mean, take AMD, for instance. Running. I still think AMD is going to be a $200 stock. So it just went from 147 to 135 in a day. It's a pretty good pullback right there. Gets back down to like 125. Do you reload some more? Or, does it break the trend and then chase the momentum investors out? A lot of those stories still to be determined.
A lot easier to look at these stocks now because now it's like I mean, there's a bona fide retracement going on here, and I know like that the Palantir. I mean, that thing's been all over the place, but you just gotta focus before you even look at like the 50% on this thing. I mean, that was a 70-point move. I mean, what are the chances of you getting this back at 110, 115? I mean, you're gonna need one heck of a pullback in the market. For now, it's down another 51 cents. Got some shorts out there too that are really glad to see this, but not too many shorts are doing well in this stock. You are coming up to a good area, folks. If you're looking to nibble 133. There's a little gap in there. He had a low at 32.93 and then a low at 33 and a quarter. And that's kind of, you had two highs in this area, and then that turned out to be the low of the day. So just a temporary, level to keep an eye on there. Micron straight down since its earnings report. Looked like it might take a little breather at 122. No, now you're in the area where you had four lows at 120 pre-earnings. That's been on a pretty big losing streak. Nvidia was strong. That was only, that had the double top. Wow, 158.70, and that pulled back. That one seems to be holding up a little bit better. But, your daily, you got a red candle to start the month, right? Daily and monthly looking the same here. So puts even more emphasis on those Q1 closes to keep an eye on here. ADP coming up in a few minutes here. Dennis, any particular leaders or laggers that you want to cover before the ADP?
No, I think, we're going to get a preview here. Let's bring the Brentster in here if he can come in because I want to break these numbers out as they break. We have a lot of economic numbers coming up here in the next 24 hours. Jobs, the big one tomorrow. But yeah, ADP is going to come up. So Brentster, what are you saying?
Howdy. So we are expecting a June reading under 100,000 jobs, 99,000 jobs is the expectation. I'll break in with that number here in about 45 seconds. Tomorrow, why don't I give a little preview for our data tomorrow? Keep in mind, we are going to get weekly initial jobless claims, and we are going to get our monthly payroll figures from the Bureau of Labor Statistics. June reading, non-farm payrolls for tomorrow at 8:30 a.m. We're expecting 120,000 jobs. Non-farm private sector payrolls, we're expecting 110,000 jobs. Unemployment rate expected to tick a little higher at 4.3%. We do have 15 seconds here for the ADP report. So I'm slowing down how I'm talking a little. So
Okay,
it seems like, see how I did that? Triple D. Here we go.
So we don't get the dead air time. And boom!
ADP comes in. Seems like it's delayed. Here it is. Down 33,000 jobs. We were supposed to add 99,000 jobs. We are seeing a decline of 33,000 jobs. This is quite a miss on our economist estimate. Futures, SP futures did fall about 5 points, rebounded a little bit here. That is our ADP reading here for today.
Calling it, go buy the dip. I'm trying to buy the dip. Is there a dip? Trying.
There's a little dip.
It's a 1 minute, man. That's the volatility. It took a while to, but let's go to the lie detector test here, and take a look at the TLT. See how the TLT is trading. That's a 1 minute here. That's from yesterday. But with this a weak number, does that So is it bad because things are slowing down, or is it good because this is going to force Powell's hand to lower rates in
Do you
July?
have to actually ask that question? Of course, the silver lining market will find whatever's good with it, and we'll be up probably by the end of the day. Even when the tech stocks all roll over yesterday, the S&P doesn't go down. The most diversified vehicle there. We'll just buy value stocks because heaven forbid we sell stocks altogether. We never do that. And they're buying the dip. Ah, shocker. I can't believe they're actually buying the dip. What do you mean they buy the dip? Really? Really? Yeah, really.
Yep.
Powell
Welcome
did
to 2025. The eternal dip buying remains.
Powell did mention when he was speaking this week, one of the headlines that I caught was that they were looking at a moderating jobs market, but so I guess some more moderation here for the Fed to chew on, but I think Dennis is right.
Hard to bet against this market overall, especially when you see the rotation that we had yesterday, because everybody's saying eventually this tech bubble is going to burst. We get huge down moves, 4, 5, 6% in some tech names yesterday, and the S&P cannot go down. That, my friends, is a bull market. Okay, news me what we have here, and I want to keep Brenster on here for 1 second.
Okay.
I want to go to the news of the day, and it is not the bank stress test. It is actually CNC.
Yes.
This stock is ugly. It is bringing down all the healthcare providers. This is one of the biggest down moves I've ever seen in Centene. It's down 17 points here now. Did they declare bankruptcy? What's going on here? That was a joke.
They withdrew their guidance. That was kind of the meat. That was kind of the meat of the press release. Press release hit here last night. A little bit of color here. They warned the overall market growth in the 22 states that they occupy is lower than expected. And there was a comment here, though, given the reactions in these stocks, and we'll get to that in a sec. Dennis and I last night were kind of looking around this press release going like, okay, well, why is UNH holding up so well here? Why is CVS holding up so well here? Why is Molina getting hammered? And so I tried to kind of dig into the release and see if there was something specific to maybe the Medicare Advantage segment. And there was a comment here. The company is in the process of closing the second quarter and analyzing data, including Marketplace and Medicaid, and expects to report. Oh, excuse me, that was not it. They said the company's Medicare Advantage and Medicare prescription drug plan businesses are performing better than expected in the second quarter of 2025. So despite that they were withdrawing their guidance, it wasn't all bad in this press release. It seemed like there was a little bit of silver lining here in the Centene release.
The market's seeing no silver lining whatsoever. Hated stock, really. It's been hated for a while. It's been drifting down since 2024. $80, 56 stocks in the gutter. Now reports and pulls guidance. They have no forgiveness for this because there's no Momo trader that was even present at all in this thing. And anybody who was trading the value rally yesterday on this puppy is absolutely hammered.
Oh,
so
yeah.
Down 30%, Joel. News comes out of the blue too, wasn't expected. The whole sector is getting hit here really hard. MOH is down 10%. Elevance is ELV. It's down 17 points, 4.3%. The list goes on and on. You can go into even UNH, which had a really good day yesterday. It's down $5. Best of breed holding up a little bit if it's still best of breed. CI doesn't trade much in the pre-market's down slightly here. CBS was down last night, only down a little bit here right now. I'd expect some pressure on XLV as well today because of this. I'd also, one more trade for you here. Oh my gosh, we are falling here actually. So I'll let Joel do some analysis.
I would just say the CNC is a pain trade here. This is people are caught big time. Look at that move that you had. You were just 4 or 5 lows. The bottom is absolutely in here at 53. The value trade, live and well, bust through 56, knocking on the door of 58, getting above the 50-day moving average, and everyone is flushed down the toilet. People are caught.
kind of nice to sugarcoat it that way. But
there's just no other way to put it. I mean, and I bet you, okay, also you doubled the volume yesterday from Friday. So people are caught. So this is just everyone just bailing. I don't know where, you like to try and pick bottoms in this thing, but right now, I mean, I would just longer term. I mean, the company just came out and gave you bad news, right? So I don't know how
Indeed.
quick you want to react. I would just say if you've been waiting to buy this stock since the summer of 2017 at the 39.50 area,
It's
this
here.
is your opportunity.
Huh.
There were 2 monthly lows there. So that's your area. The next monthly low is between down at 36.34. So best case scenario, I think here for CNC longs or people trying to initiate longs, see if we can hold up between 36 and 40. I got to go wide because this is a multi-year move in it. So potential support 36 to 40 in CNC. I don't know where to tell you to sell it because I mean, I guess the bid at this point, huh, Dennis?
I'm not going to say anything on CNC. When you're selling stuff down 30%, who the hell knows?
What do you
But
know?
what I
Yeah.
will say is the sector is going to have some interesting rotation here today because XLV is not down very much, and they've got a lot of these stocks in there. So you know what that means to me? It means probably, and again, this is ETF effects. Nobody talks about this except me because nobody understands and nobody trades ETFs as much as I do. But I talk about ETF effects all the time, especially in the STN room. I think some of your drug stocks get bit on this because XLV is full of these healthcare providers barely down. They're going to buy something. Well, Merck, Pfizer, Bristol Myers all had pretty good days yesterday. I think the money could just rotate right within the index into those names. So keep an eye on those drug stocks. Any of those open down here today, I may be trying to take some longs for trading perspectives. Pfizer, even Lilly. Lilly's up a couple bucks here this morning. You're seeing a little bit of that rotation already here today with the S&Ps down, but these stocks trading a little bit higher. Maybe yesterday's rotation into some of these names is exactly what the doctor ordered here. This news here that we're getting to continue that rotation. So I'd keep an eye on my Amgen, my Pfizer, my Bristol Myers, my Merck. I think those stocks could actually go up on this bad news, even though it's fundamentally has nothing to do with them. All ETF effects.
Yeah, I mean, Amgen trading up 250, Lilly trading up a couple bucks, kind of in the middle of a no man's land. Let's look at some of these other stocks. So UNH, I mean, it battled its way back trying to get into the gap area. The big level we'll be looking for in this one is did it make? No, I did not make a new high for the rebound. It did make a new high for the rebound, but the gap area is not up to 342. Ended up having a green candle last month after all that brouhaha of the federal investigation. So that's trading down $5. We'll see 1.62%. Molina was taking it on the chin. MOH, that's down to $36. You thought 290 was the bottom. Well, it's not, but at least you have some identifiable daily lows to look at for this one. 262.32 and another low at this is called 265. Another leg down here in the S&Ps here, Dennis. We're now trading on the lows of the pre-market session. I mean, I think there's dips to buy here. I think the street is being a little cautious here on this dip. We talked about after the breakout in the S&Ps, the new all-time high. The next thing you want to do is like build a base of support, right? To consolidate and hold. You do have a good level in the S&Ps. It's another 20 handles lower. That would be Friday, or today's Wednesday, right? Monday and Tuesday's lows. That's the area that bulls still firmly in control until that level is breached. 2 daily lows. It's just called it 62.25. But continued selling pressure. There was a nice dip when we were doing the pre-market show. We rallied back, and now this number has people spooked a little bit, trading on the lows of the pre-market session.
We are getting
explain ETF effects just quickly here. So
Yeah, sure.
XLV go into, just to finish this up, XLV is got a lot of healthcare providers in there. UNH is 5.8%, just going through the list. And they're not huge, but there's a lot of them in there. Cigna is 1.82%, likely to be down with it. Elevance is 1.8%. It's down big time here. You've also got, just jumping through them here and looking, Centene, which is the one that's down huge, is 0.56%. So it's not as much, but I mean, that's a big down move for it too. Humana is 0.61. So you add them all up, and this is like roughly like 10% and 0.56%. So right off the bat, just for Centene, it'll 0.56%. So let's knock 0.25% off XLV just for Centene, 0.25% down. Well, XLV is only down 0.35%. So all that other stuff, it's all math, right? So 0.1% is going to be UNH and CI and the Humana for sure. So you can clearly see that the healthcare providers are going to have to, obviously rally substantially if XLV is going to go here, or alternatively, they're going to buy some of the drug stocks to make the math add up. Lilly's 12%, so that's a likely candidate that could get bought on this, just from ETF effects. Johnson & Johnson, defensive, likely candidate. And we're starting to see those bids already form here. AbbVie. So just keep all that in mind, is what really drives price is not, momentum, yes, from a technical basis, technicals and all that. ETF effects are what holds price in line. At 9:30, the math all has to add up. At 8:27, it doesn't. This is why, I love trading after hours and pre-market. What do you mean the math doesn't add up? The math doesn't add up at 8:27 because a lot of those stocks aren't really open. They're not open, but they're wide. They're not even like tight markets. So we don't know where those things are going to be. At 9:30, when everything is open and all the liquidity is there, all the math has to add up. So what it allows is for an arbitrage opportunity of trying to figure it out ahead of time, and I do try to figure this stuff out. So right now I'm seeing that in all likelihood, if XLV is going to open only down 47 cents, and it may only open down, that may open down less, they're going to have to buy some other stuff to make up the difference. The likely candidates is the Lillys and the Mercks and the Pfizers and the Johnson & Johnson. So that's where I'm getting the strategy from. The strategy pays my bills.
Okay, yeah, we got the list of the components there. Well, Lilly overweighted there, and it coincided with the rotation that you had in the market here. So when the market goes down, not everything goes down. Which is one thing that we've learned from this market. So compliments of the ETF channel here. We could take a look. Haven't mentioned this Johnson & Johnson in a while. I don't even know if we covered their last earnings report, but Johnson & Johnson, big day yesterday, trading up 38 cents. At key level, if anyone trades Johnson & Johnson here, you made a high 157.75. So got room up to there if you're trying to use the dailies as a trade here. 829. Dip, buyers coming in here, not even letting this market go into the 62.
What they do, man. They buy the dip. That's what they do. It's a hard market to stay bearish on when you have all that rotation. The other major headline from last night, and which is going to be pricing in this morning, is indeed bank capital return allocations. So we had them all pass the stress test on Friday. Last night, they came out with capital return policy or new, what do you call it, Brent? Background, capital allocation plans. So basically, their excess capital, because they passed the stress test, they can return some of that to shareholders. So you had JP Morgan doing a $50 billion buyback, announcing that last night. Not priced in here yet. Stock doesn't seem to care, only up $1. We'll see if it cares at 9:30. I'm not sure it's going to or not. Sometimes they don't reward buybacks as much as they do dividends. And Goldman Sachs didn't do any buybacks. They put it all in the dividend. They raised the dividend $1. So a little bit of a whimper here on some of these buybacks. But JP Morgan's a big one, $50 billion. Morgan Stanley did a $20 billion buyback. Full disclosure, I'm long Morgan Stanley. Nice. But the other ones didn't do that much. Like Bank of America raised a little bit, and Wells Fargo raised the dividend a little bit. Goldman Sachs raised the dividend $1. The big one was JP Morgan. They have $50 billion buyback. That's significant, but again, obviously it's significant when you get buybacks because it reduces the share count, which increases EPS. It's not really responding much to it, only up $1. So I don't know if it's maybe the S&P started rolling over. It was up a little bit more last night, but just not much response. Give me some technicals, JP Morgan, Joel.
JP Morgan made a new all-time high on Monday at 292.65. Coincidentally, you did get there. You got there right there, 92.86. So it's been up there once. It's an all-time high. I can only make it a 2-star for you. I mean, it is what it is. After that, start to take about 300, but the stocks, they did have good days when it was announced. The all-time closing high was made yesterday at 289.91. You're $2 above that. So if you're looking to bring this in, potentially shorting it, that would be the area. After that, you had the big volume day at the end of the quarter. You had follow through on Monday from the results of the stress test. Volume kind of trickled a little down yesterday here. So you need more buyers, right? If the price is moving, you need more buyers to take it higher. So still looks like until you take out that high at 292.65, all-time high in place. Interesting technical setup in Morgan Stanley for you Morgan Stanley traders.
Sure.
Triple top and nearly a triple bottom. So we play this. We look at 142. Path, at least we break above 142, near all-time high. Back, traded that area before. It's a pesky area. On the downside, trapdoor here. It's like, I'll just call it 139.50. So matching range days, consolidate another leg lower here in the S&Ps. So looks like we're headed for the lows from yesterday. Wells Fargo, I always thought that it would never trade $85 again. Remember that one day when it traded 85 and the pre-move like $9? Well, it's back up in the 82 handle. It's up only 7 cents. Got it right at yesterday's high. If they like this news, it's opening up at yesterday's high. It's going at 81.50 bid. And I imagine there's a pile of stock in 82, just knowing this stock over the years. Citigroup. Now, Citigroup hasn't made a move yet, right?
No, and they didn't do much either. No, they did, and they didn't. I think I can grab it for you too. They raised a dividend like a nickel or something last night. Let me look.
Wow.
It wasn't much. No, I don't even know if they did anything. Did they raise the dividend even? Looking, reading the press release, tier 1, they raised the dividend 4 cents. So they didn't do really anything. They already had a buyback in place, so they talked about commencing that. They said they've got $20 billion repurchase out there. They announced January 2025. They've repurchased $3.75 billion to date, so they still have some stock to repurchase, but they didn't announce a new one. They didn't add anything to it, and they only increased the dividend a nickel, which isn't enough to move the needle.
I just wonder, we're going back. Yeah, we still got. Well, we got another.
I never get back to those all-time highs. I mean, people don't go back enough far on their charts, and they always say, "Oh, yeah, Citigroup all-time highs." No. Citigroup's all-time high is $500 a share in 2007, and maybe it's never ever going to see it again. That was with the financial crisis. There was many stocks. We do this lesson about once a year. There was many stocks that will never come back. Look at AIG. Do the same thing with AIG.
Oh, we don't even talk about
long-term investing always works, folks. Oh, yeah, you're never getting back there. What's the all-time high in AIG? What is that on that bar on that left?
It is 1450.92. But what a long consolidation period here, Dennis.
Oh yeah, the rise to 1400. No, because these things had to seriously dilute themselves to survive. The financial crisis was that bad. Obviously, we lost Lehman Brothers, Bear Stearns, a number of other regional banks and smaller banks. The bigger ones, some of them, had to actually dilute themselves enough to survive. Citigroup was one of them. AIG was one of them. Fannie and Freddie, we never saw again. I mean, obviously on the pink sheets. So, I mean, it's, when you go through those crises like that, sometimes the stocks will never recover. I would gather that AIG will never see $1,400 again. Sorry, dilution is a horrible thing for stocks. Right? Frank's in the background.
All right. It's Frank Holmes time. Frank Bulldog Holmes. How you doing today?
Outstanding, my friends.
Yeah, yeah. You like this market? A lot
Yeah,
of things to like about it, not much not to like about it. Chief Investment Officer, CEO of US Global Investors, a frequent guest here on pre-market prep. Let's go right to Bitcoin here, and let's talk about the recent move in Bitcoin.
I've got the
The,
shirt. I've got the shirt.
this Bitcoin,
He's got the
Bitcoin.
shirt. Bitcoin.
well, it's a very exciting times for Bitcoin because it's not just Michael Saylor leading an incredible charge. The concept of being decentralized is going to happen with data centers all across the country, small data centers for military, for creating a dome over America. The concern is we saw when the bombing took place in Iran, 15% of Bitcoin mining dropped, gone, because the power stations were taken out. And they were buying with the military, were just getting a mechanism for them to get US dollars was mining Bitcoin and buying machines from China for next to nothing. And they have next to nothing energy. So it's interesting to see the decentralized mechanism. And so the strategists, the military strategists are talking about the success. When we go back to Napster and peer-to-peer file sharing, which is, I believe, was a stepping stone to decentralized Bitcoin. The idea that if you take out all the major power stations in America, or you take out particular power stations and the data centers, you can cripple the infrastructure. So the idea of having small data centers back up all across the country with diesel, and all of a sudden if something gets taken down, they can come online and keep the whole shield around America strong. This is how the idea, some of these strategists are talking about what they learned from Bitcoin is going to be applied to national defense. And that I know because I'm following war and what's going around with war and the AI and the application to have the best defense. So I just spent a week last week, Joel, in MIT with 100 CEOs called AI Boot Camp. And the applications for every industry. And it was amazing. My brain is exploding from all the information. So I remain very bullish on Bitcoin. And I'm seeing now the second derivative, like Bitcoin created Web3. All the other coins came on the back of the success of Bitcoin. Now we're seeing military strategy because the decentralized mechanism works. So Bitcoin is going to become an important overall theme in America, not just a monetary theme, a financial defense against monetary printing. M2 making all-time highs here. What people don't follow is China and India's M2 is hitting 10%, and they're 40% of the world's population. So it really bodes well for Bitcoin.
Frank, I got to ask you just about these stable coins, because this has been the talk here in the last, few weeks in the month with the big run that Circle has had. And, I'm not a big crypto guy. I don't know much about stable coins and stuff, but I'm telling you, the market loves this stuff here. Can you tell us a little bit just about stable coins and in the applications for stable coins, as real as everybody thinks they are?
Well, it's a company called Tether's led the charge. And Tether was created by 100 different computer scientists that live in Lugano. And it was created, the original person that started all was a medical doctor that left and went into the crypto ecosystem. Tether is a money market fund. Stable coins are money market funds, but they don't pay interest. And the owner of the stable coin, the manager of the stable coin, keeps the interest. That has allowed Tether to become the most profitable company in the world with 175. They made $13 billion more than BlackRock did with only 175 employees. Because outside of America, Tether grew to have almost 400 million investors, on average $3,000, that wanted US dollars in digital format. And so it proved that the demand for US dollars is huge outside of America in a digital format, because banks like in Argentina in 2002 confiscated all US dollar bank accounts, and it's fraught through Africa and Eastern Europe that the government controls. Only 5 banks control the economy. They come in and they take your dollars. The only way to protect yourself is if you don't have gold, physical gold, then you have digital money, and Bitcoin becomes that digital money. Well, the other thing on the back of Bitcoin came Tether. Tether came afterwards. So just think of it. What is a stable coin? It is a money market fund that does not pay interest. What does that mean? It means it's not a security. And so now the US government comes out with its own stable coin that around the world that people can turn around in all these emerging countries by a billion people can own digital money backed by the US dollar. Tether owns more US dollars. The backbone of Tether is US dollars. Then Germany does US securities. And they are at the auction table every week buying. They also own in another stable coin 50 tons of gold.
So Frank, why is this going to be? And again, we're hearing about like Visa and MasterCard potentially, being disrupted here, and Circle's obviously been and the stable coins. Are we going to transact in this? Like, is this like going to be like
Yes.
what the future of transaction is? Not dollars, but stable coins. And
I'm sorry to cut you off, Dennis, but absolutely, we've had to do it. Hive, which I'm the executive chairman, and have this massive build out in Paraguay. The banks down there said that they couldn't open a U.S. bank dollar account to take our money because the money center banks in New York, like J.P. Morgan, say you can't do anything with crypto. This is beginning of this year. So we were able to start building and fast tracking our growth by using a stable coin. And we could use JP Morgan stable coin, but we couldn't use the wire system. It's just bizarre on the regulatory friction that you have everywhere. So the stable coin mechanism allowed Hive to move millions of dollars to buy equipment, to turn around to build the infrastructure. Now we have a bank account with the newest bank, which is it's called Buono. It's a e-bank, no branches anywhere, and it's caught 30% of the population of Paraguay with digital wallets. It's remarkable to see. So what you're talking about here in America with Circle, the success of that, stable coins are on the backbone of the success of PayPal. So we know what the significance of PayPal and then Venmo, which is what we relate to. The rest of the world does not have the PayPal and does not have the Venmo. They have other forms. And the big build out of the other forms were stable coins or a knockoff of PayPal that would go to Tether's stable coin. Then when they could send money all around the world. And it was US dollars.
Do you think this is disruptive to MasterCard and Visa? Because we saw an initial sell-off of 5% when, obviously we had some news on stable coins and the government. That the stocks are probably back. MasterCard and Visa have got almost all those losses back here now. Is this another selling opportunity? Is stable coins truly disruptive to MasterCard and Visa?
Absolutely. And they're going to have to come up with their own stable coin or they're going to acquire someone. And you're going to see the banks to turn around to acquire some of these other stable coin providers. It's a way, and it also helps President Trump with his massive deficit and debt load, realizing that you can raise money through a digital currency around the world, just like Tether has. People want US dollars. The golden visa that they have in Dubai and they had in Spain dropped it. Portugal has it. Greece has it. I think it's $250,000 in Italy, $250,000 or euros in Greece, 500,000 in Portugal. You go buy a property over there with 500,000 and you get the special golden visa. In America, it's 5 million. It's 5 million. And they raise billions of dollars. So it shows you that around the world is that this is deemed as the safe place to be and that people want to have this golden visa. So I think we're going through this digital transformation. The other thing, Dennis and Joel, that really blew me away a year ago, I think I know things, and I've realized I knew nothing. Coming to jets. Well, what is part of the binge of travel? It was just explained as COVID. And then it was people don't want to go back to work, etc. What's evolved? And I discovered this through Reddit. All these sites on Reddit of how to be a digital nomad. So then I started digging and finding out more and more. There's like 50 million people. And if you're an American, you can make the first $120,000 tax free. So they go for 2 to 3 months and live in Costa Rica. Then they go down to Argentina. In Europe, they go to Spain and Portugal. They go where the uploads are fast so that they can do their work. So you can have, and even in Barcelona, you can have what used to be a PR agency that we used. She moved her operations to Barcelona, so because she wanted to learn Spanish, and it was inexpensive. Wow. So Airbnb is a big beneficiary, and along with the 50. So now if you have 50 million people flying north-south 4 times a year, that's 200 million people. That's a lot of seats. Well, they didn't create enough seats or slots for the airplanes to land. So now that gives a digital pricing power to the airlines. And now we're seeing in the US record number of days. But what makes you want to like just go, this is pathetic. There's no analysts on Wall Street. They ought to listen to your program more often. There's not one analyst that caught the airlines. And last year, United was up 130%.
Huge.
One airline said it would go 30%. But they all, it's the same thing this year. Under President Biden, it was every negative economic data publish. Always the risk. And another President Trump, same thing. So here's a contrarian thought process. We have Liberation Day, April 2nd, big tariff battle, etc. around the world, sell off, immediately comes back. What comes back, which shouldn't intuitively come back, is our ETF called C. C basically captures 80% of all global trade. Raw materials, finished products, all have to go with cargo ships. Cargo ship rates went up. So I scratched my head, reached out to my chief operating officer at Hive and said, what happened to all those containers we're buying from Beijing, for Paraguay, from Bitmain, and from Malaysia? What happened? And he said, well, the first shipment was all in one ship of 100 containers. And I said, that's great. The second one, prices were 30% higher. There was no room, and we had to spread the 100 containers amongst 5 ships. So what is happening? The cargo ships are above their 50-day moving average. And
wow.
The whole negative news about interest rates, well, rates, the 2-year, which is basically currencies trade off, 5 years dividend paying stocks trade off of, and the 10-year all fell below their 50-day moving average recently. So there's much more positive news. TSA publishes every day the record number of people flying to America. BA has 1,000 flights a week flying into American cities from London. 1,000. I mean, there's no American air company that's flying that much. So the Brits are coming. The dollar goes off. The dollar goes down. Well, let's go to America for a holiday. Try to get a theater ticket in New York City. Go to get Hamilton. Hamilton 3 years ago was $150 for a decent ticket. Last night I was booking. It's $400.
I know. What's crazy.
Right? So, there's no inflation and no one's busy. The hotel rates, they're up more than 30%. So something else is happening, and I'm very bullish. That's all I can tell you.
I want to ask you, Frank, just what you're touching on here, because we see this CPI and they say inflation's 2%, but everything I look at is up way more than 2%. What the hell are they calculating to come up with 2% here? Because like the ticket prices, and we see it across the board. It's like, I buy something this year, and then, you buy. So for example, even, we bought this ice maker. It was in 2021 now, gather you. But we paid it was like $1,400. That same ice maker today is $3,200. The exact same model. It's up 140%. They will not tell you that the prices are up over double since COVID, but they are. what is it? Just all lies to us? Like, how is a CPI calculated at 2%?
Well, it's not lies. They just change what they pulled the data from to give you that CPI number.
That's just made, yeah. So they fudge the numbers.
So there's a newsletter writer that publishes what the numbers were in 1980, the CPI calculation, and inflation's only running at 13%.
If we calculate it that same way.
Yeah. So if you look at
calculate in different ways, so it doesn't look bad.
Yeah. So and they try to say, well, the demographics for this reason, that reason, and so we made these changes, and this CPI number populates, which I honestly don't believe the reality. And I see with the airlines tickets. So the jets, they have pricing power. They still trade at less than 5 times earnings. Wall Street is so wrong. Like it's just like we have one analyst that doesn't but consolidate all the headlines, etc., and it's negative about everything. It's amazing to witness that, whereas the market continues. So I was reading a data point the other day about the significance of small investors. Do you know what the market cap of Robinhood is?
It's crazy. Yeah, 70. We were looking at the other day. I think it's 70 billion or 80 billion.
Yeah.
Where is it now? Yeah.
It was over 50 billion. They made an acquisition in Canada to buy for $250 million, and it went up 5 billion. They're now launching in Europe, tokenizing American stocks for 24/7 trading. It's like dismissing this as being a real tactical issue. They said, well, that's going to hurt. In Canada, they said Wealth Simple or something. It's not going to hurt them. They're taking on the Canadian banks. That's what they're doing, and they're creating they're the most important part in music. If you were an R&B singer in the 60s, you didn't make much money because you didn't have the white crowd. And the great big thing were the bands that did the crossover. Elvis Presley was the first step if you follow music. But then we had Earth, Wind, and Fire, and we started seeing these bands come out, and they were able to create a theme and music that the much bigger part of the population all of a sudden said, we love Diana Ross and the Supremes. We love Motown. Let's get it on. And then Motown became a huge record company on the great crossover, a transition in music and social economy. This is happening in the digital world. So here we have this company just started Robinhood. 20% of the profits come from crypto. They buy a crypto company in Canada. They're taking on the banks in Canada. The shakeup are the Canadian banks. It's not a small company that's got worth $200 million doing RIA type business. No. This is the big banks. This is very positive. Now they're going into Europe, and they're creating, they have the data center in Lithuania. They're creating, so we're seeing all these changes. Wall Street doesn't get it. They're going to get it on your program. The investors are going to have to listen to people like you guys more often, because it's all pablum that comes out of there. And they want, from me, $100,000 minimum commission dollars if you want to get their big research reports. And you know what's going to Uberize them? Open Chat GPT. I was at the Bitcoin conference with Michael Saylor. We had a private setting, and Michael said that he told his lawyers that he wanted to create a new unique preferred to pay dividends, and they said, well, you can't do that, and the accountants said you can't do that. So he said he went to Open Chat, and he dug down for hours and basically drafted the white paper of this is the preferred, and this is why it meets all these securities laws, all the GAAP laws and rules and regulations, gave it to the lawyers and said, just process it. And he went out and raised $1 billion. And so you have a sort of a old school mindset, dinosaurs in Wall Street that are not embracing stable coins, not embracing the Robin Hoods. They put up all, and you get the politicians too, like Elizabeth Warren, that have bank lobbying group behind them, and they're missing something that's so important in the growth of our economy, the innovation that's so critical. So I remain so excited, and I think they're going to have to print money. I think other countries are just going to print more and faster than the U.S. They're not. The other countries don't have the unique structure that we have, like DARPA. People don't realize how powerful DARPA is in funding the future that ends up showing up in healthcare. Right now for military in San Antonio, it's a drone ambulance. A drone ambulance. So you're out on the lake country in Michigan and you have an accident and a drone picks you up and immediately takes you to the hospital faster than an ambulance can get there. And they're trying to find a way to operate on you because that's what they learned in Afghanistan they have to do. But it goes into healthcare. AI surgery from the best surgeon using his mouse can be anywhere in the world. That comes from another great company called is Da Vinci Machine. Who's the original investor? DARPA. And so other countries don't have that uniqueness that we have. So they're still far behind. But I thought it was interesting when Trump took on Europe that they have to spend more money on military spending. And what do we see? They're going to create an American-style military industrial complex. And so I try to tell people when Germany said they're going to spend up to 5% of GDP, well, they're the fifth biggest GDP in the world, $4.5 trillion. They just made a commitment for up to $250 billion. The German tank maker went up 100%. Wow. The NATO ETF in London, every time there's bad news of Russia and Ukraine, 50 million goes into it. So
Frank, this has been
that's unbelievable information.
Yeah, that the information and just what you're just covering here, Bitcoin, airlines, defense, cargo. I mean, Frank,
that's the stablecoin conversation.
Stablecoin conversation is one that we're gonna have to get Josh to write that up. Frank, every time you come on with such great information. Chief Investment Officer at U.S. Global Investors, spanning the globe to give you great trading ideas. Thanks, Frank, and we'll have you back on. Enjoy the 4th of July. We're going to get you back on in August.
Thank you, Joel and Dennis, and stay positive.
Love you, man. Awesome job.
Education there, Dennis.
Just so much because, like, we are kind of the old Wall Street, me and you, Joe. We're the old guys on Wall Street. You know, we try to bring this stuff up and we want to learn about this stuff. You know, I want to know if MasterCard and Visa are going to get disrupted. You know, I want to know these things. So, I mean, it's so much good information coming from somebody, you know, that just knows so much about everything. I mean, just, you know, awesome conversation there. So that's why I went overtime with Frank. We're about 7 minutes away from Tesla sales data. We're going to try to stay on with you guys a few minutes later here to cover the Tesla numbers. Brentster, I don't know if you've got a preview of these numbers or not. If you do, that would be awesome. 905 is usually when they drop. I think they're going to be bad, but I think everybody knows they're going to be bad. So I don't know if that's necessarily going to drop the stock or not. They may initially, because the algo is too stupid to price that in, might get an initial drop. But I don't know if it's going to be one of those opportunities where they buy the dip. Do you have any preview on the Tesla numbers?
Digging? I don't really have. I'm digging right now. Let's see. The Seeking Alpha analyst consensus is for deliveries of 393,000. That would be down from over 500,000 like in January.
Yeah.
So
everybody's all over the place in this. I got a whole list of them here too. I just grabbed. So RBC is like low on the street. They're 366,000. So that would be a disaster. Some people are saying it could be as low as 352. Original estimates were up at like 390, like you're saying, 406. So it's going to be bad. The low estimates look like around 366, but some people are thinking it's going to be as low as 352. It's going to be really interesting. JP Morgan is 360. So I'm just grabbing some other banks. So there are some banks that are lower, 360. I don't know. It's going to be very interesting. That's why we want to stay on with you, because these numbers, I think, are going to be really bad. I just got a feeling these numbers are going to be terrible. I just don't know how the stock reacts, because I think everybody's going to be terrible. If they get over like the 366 number and they're okay, they'll buy the hell of the stock, because this is but if they come in like 300 or 320, like way below, I don't know what that's going to mean. So we're like, you know, a minute or two away here. We're going to get these numbers here. Usually 9:05. We don't know the exact time they drop. Usually 9:05. We did get the numbers from GM and Ford yesterday after the show was over, and they were actually good. General Motors numbers, if I go, I don't know if you have them from yesterday. They Brentster. I can go grab them if you don't. they were good. So we're just doing comps here because GM was actually up 7% in Q2, delivered 746,000 units, EV units of 46,000. So those numbers were actually excellent for GM yesterday. Another reason why the value trade. Ford was up huge too. They delivered 612,000, 14% jump in the second quarter. So you're seeing jumps in Ford and GM. So people are buying cars. I don't think they're buying Teslas. Let's find out here. 3 minutes away. Here we go. Maybe they are buying Teslas. The numbers are out.
Oh, they're out.
Tesla. I don't see the numbers yet. I am going to the investor relations page.
Algo jumpers.
Let's see. We got
bought it hot. Now it's all over the place, man. It's wild right now.
Yeah.
I'm on the investor relations page. Don't see him just yet.
Oh, I'm sorry.
I got it.
Here you go. I got you.
I got it.
Okay.
There you go.
Okay.
Still waiting for the numbers.
Still waiting for the numbers. Still waiting for the numbers. Waiting for the numbers.
384,000. Good enough.
Good enough.
Is good enough. We had estimates as low as 366. 390 was the official estimate. So against the official estimate, that is a miss, but we know the street was a lot lower. The street was looking 366. So if they could come out, it was probably going to get bought, and it is. So 384 is good enough here at this point in time. Does that mean it's out of the woods? Does that mean the brand damage is over? Does that mean I don't know any of that stuff? I have some Tesla on my long-term account that I'm not looking at. But, the path and a lot of obviously what political talk, which I had the conversation on CNBC World there yesterday, and my concerns for Tesla here. But these numbers are okay. The numbers are fine. And fine is good enough for Tesla to rally because a lot of people thought these numbers were going to be a disaster, including myself.
All right. This is really a curveball on the technicals. I mean, it's moving up. It just is. It's sloppy. Down here, we got the pop. We've already filled the gap. Yeah, we've already filled the gap from yesterday's session. I think I'm just going to take a look at so we took out this support and now we're back above it. We had support at, oh man, I want to give you one number. I want to just make this one number and it's making really difficult. So I'm going to stab. If this closes above 330 today, I think the bulls would be fully back in control. If it can get back up, it will knock out all these losses from the last couple days. You had closes at 325.78, 327.55.
The bulls are in control right now, man. Yeah. We don't need to get to 330 for the bulls are in control. A lot of people thought those numbers, including myself, were going to be a lot worse than that. I'm actually impressed with those numbers.
Okay.
384, especially since we already had like the international numbers coming in, so they had to be pretty damn good in the U.S.
Mm-hmm.
So I'm impressed. 384. I don't think anybody thought they were going to be there at 384. I know that official estimate at 390. People could be saying a miss, but that we know the street was a lot lower than that. This is fine, and maybe that was another way. Lacaster said in the chat, "Fine is great for Tesla these days."
Rally in the market.
These numbers are good.
Yep, rally.
These were fine. So I thought they were going to be bad.
Okay,
they weren't that bad. They weren't awesome, but they were fine, and fine is good enough. So bulls back in control here on Tesla. That's where we're
moving
at.
The market
7%.
So, all right. So tomorrow we're gonna have some fun on the pre-market prep show.
Oh yeah.
Yep. We're gonna bring back an oldie but a goodie to give us a little bit of humor in the markets. Bill Santiago is going to be joining us tomorrow. Nice. On pre-market prep on a holiday session. So
fun.
Tesla pulling the market back to unchanged by the dip works again. We'll see what we do at that.
We have Microsoft news here too, just breaking. They are going to lay off as many as 9,000 people. Seattle Times reporting this of all places. So 9,100 employees supposed to be laid off. That's 4% of the workforce going to be laid off. For Microsoft. Microsoft dipping a little bit here right now. Reducing
the costs. It's a good thing.
That's what they gotta do. Yep. That's what they do sometimes. So lots of news. Fun.
All right. Fun, informative session here on pre-market prep. Back with you guys tomorrow morning.